All right, all right. What's up,
What's
Brian?
up?
Thanks for
What's up?
joining. We are live again for
Live.
another Ask the Mortgage Guys episode number 2. Hope you're having a fantastic day, everybody. Thanks for joining. Here to answer all your tantalizing mortgage questions.
So many.
All right, Brian, I'll let you kick it off, man.
Yeah, so today's topic, we're going to be talking about self-employed borrowers. I think this is such a perfect time to discuss this because tax season is just around the corner. Everybody has about 24 days to kind of get their crap together and send everything into their CPA and all their deductions and depreciations. I mean, there's so much that's happening, for a small business that needs to kind of be done for your taxes. Today's topic is self-employed borrowers. Biggest thing that I see, kind of the hiccup for most small businesses and also real estate agents is, their filing of their taxes. Most people think I make $200,000, then I should get to use $200,000 in order to buy a home. But unfortunately, that's not how Uncle Sam allows us to work. They want their piece of the pie. So if you make $200,000 and, you and your CPA sit down and you say, hey, we're going to deduct $150,000, which, off of depreciation, off of, your vehicles. I mean, there's a lot of things you can deduct as a small business owner, which is the great benefit of being a business owner. And you are a business owner, right? So
Right.
It's great to be a business owner and to be able to deduct those things. But what small businesses and real estate agents need to know is that significantly affects your purchasing power to purchase things on credit. I repeat, if you deduct all of your money from your business so you don't pay any taxes, you will not be able to purchase a home in the conventional route. Okay. Ange, can you dive into kind of maybe a program or something that we could utilize to help that self-employed borrower if they get into this hiccup where they can't purchase a primary residence and they need help?
Yes. Great info, great topic today, Brian, that you want to talk about. A huge problem that we see is when you write off all your income, claiming a loss. But we have solutions as mortgage brokers. We're not your typical bank. We're a mortgage broker, so we have many outlets for that. We have a bank statement loan, basically where we use the deposits of your bank statement. I know we could get into the details and get into the weeds with the guidelines and the percentages and all this other stuff, but just know that if you deposit money in the bank on a weekly, monthly basis, as a self-employed individual, now mind you, you have to be self-employed, have all the paperwork that you are self-employed with the state, 2 years self-employment, right? So that stuff still applies. But they basically look at what you deposit in the bank and they use that as your income. So we have options when it comes to that. But if you want to maximize, if you want to get the best financing, of course, you want to do your taxes correctly from the get-go, from inception, once you start your newly self-employed venture. But if you don't, we have bank statements, to help alleviate that stress when it comes to not filing your taxes to pay less taxes, basically. So,
and correct me if I'm wrong, we can utilize that bank statement loan for like a primary residence. Like
correct.
It doesn't have to be used for an investment property. We can use those for primary residence, right?
Correct. You can even use it for primary, secondary, and investment. So you can use it all across the board. Of course, limited loan to values and stuff like that. But yes, you can still purchase additional types of properties, different occupancy types with that bank statement loan.
Awesome. That's really good to know. I think that's going to help. I think that's going to help a lot of these self-employed borrowers. I feel like the info's out there, but a lot of people don't know about that. So they'll get they'll get denied by, a state employees credit union or, a big bank, a Wells or BOA. And then they're just like, oh, I'm shit out of luck. I can't purchase. But that's
Right.
what's so nice about working with us and working with a broker is, we would never allow you to get into that position because we would have you underwritten and we would know you don't make enough money tax wise. But just know you have an outlet. If you are with a bank, if you are with a retail bank right now and you've been denied, contact us. We have that ability so you don't lose deposits, due diligence money. We take that stuff seriously here.
Yeah, and so we have basically a two-pronged approach to that, right, Brian? So when somebody, let's say somebody calls in and says, "Hey, Brian, I'm self-employed. I make X. I want to get approved for a loan." Tell them just the steps of what you do to check A, and if not, basically plan A and plan B.
Sure. Yeah. So, we never give out a pre-qualification letter. If you're working with anybody that is just giving you a letter to just hopefully, close a loan and get lucky. I mean, essentially get lucky. It's kind of like just doing this and hoping that the loan closes if you get a pre-qual letter. So, we take, in this case, a self-employed borrower, we're getting 2 years tax returns. We're making sure, that they have, proof of funds. We're making sure that their credit, is good as well, score, and also, any derogatories or collections. That's where, our real estate agents that, we partner with, they know how strong a pre-approval letter is from us because we don't mess around with that. Our approach is underwriting these files so that when we send it to the underwriter, they're like, okay, cool. One touch, we're good. We're ready to clear to close in literally 2 or 3 days. It's just, our approach is just we try to make it as concrete proof, as possible. So.
Yeah. And so when it comes to, if you know you're self-employed, we're going to look at your tax returns first to see if we can pull any, additional income out of those tax returns. And if not, then it's going to be plan B, our bank statement program. So it's, like I said, it's a two-pronged approach. We see if we can get you the best options, financing options first. And if we need to resort to plan B, we got that in our back pocket.
Yeah. And as a home buyer, that's the approach you want. You shouldn't be trying to put in offers on homes that you don't know, like, are you actually approved or not? Like, the goal of a home purchase is not to lose money. If you enter into that contract without knowing you're actually approved, you're going to potentially lose money. There's a high chance you're going to do that. Yeah, so that was a really good topic.
Yeah.
Now, I wanted to dive into, I know we're going to keep doing this every week, and we're going to do a pricing scenario, and it's just going to be random. I mean, some weeks we'll do a VA purchase, conventional, USDA. Today, we'll do an FHA purchase. So I have my easy qualifier up here. So a $350,000 purchase price with 5% down, with a 700 credit score, with a 30-day lock. We're looking at a 5.5% interest rate with no cost. APR on that, FHA is a little bit higher because there's a funding fee, so it's probably around like 5.7 for APR on that. But that's pretty strong right now for an interest rate. FHA gets a lot of bad rap. I really don't know why, because most people don't know how to close FHA loans, lenders. But I mean, our time frame for closing FHA is literally the same exact time frame for conventional. We're CTC'd in 14 days. We're ready to rock. So
right.
Sometimes lower credit scores, if you're a 700 to 720, sometimes an FHA is a lot better pricing than a conventional.
Yeah.
So I mean, don't be afraid of FHA, guys. It's okay.
Yeah. And the common, because we get pushback from sellers because of FHA. And so we've talked about it. And so we just need to educate the public, Brian, as to why some sellers think that FHA is just not a bad or not a good loan to do versus a conventional. I mean, granted, with the age of the property, right? But all things being equal, newer properties, I'll kind of let you speak on that.
Yep. Yeah. I mean, obviously there are some, appraisal guidelines when it comes to FHA, some kind of different little nuances, like if it's on a shared well, obviously lead-based paint,
Right.
things of that nature, but like handrails on some stuff, safety issues. But as a home buyer, like I kind of want those things to be taken care of, right? I don't
True.
want to go into a home that has no handrail and my, 70-year-old mom is going to, fall down the stairs because she can't put her hand down and it's, snowing out. It's just,
Right.
FHA is obviously it's government backed, but they do have all their stuff is pretty much safety guidelines, so,
Right.
yeah, so that's all I have
Yeah.
to say about that.
Yeah, when it comes to right, and so there's some nuances that you were saying, like the wood rot. If it's wood siding and it's got a little piece of rot or something, the appraiser may notate it. So it's all but if it's a brand new house or a couple-year-old house, it's got vinyl siding, and let's be honest. I mean, if it's better for the buyer, it's better for the buyer. Of course, the seller doesn't care, but that's where you agents, you have to come in and back your buyer up and your lender up to basically help the seller understand that it's okay.
And
it looks like there is a question
some
here.
Questions. Yeah.
Roy One Life. Yeah. When do you think will be a good time to cash out refinance? I have paid off a rental and I want to take out $300,000.
That's a good question.
I'll let you answer that, Brian.
Yeah, honestly, it's what your goals are. Right?
Correct.
So if your goals are to do what we want to do, which is increase a portfolio, own as much property as possible, your interest rate is futile. Okay, because the whole point of owning real estate is to depreciate and is to earn passive income. So it's always a good time to refinance, to obtain that much money, to purchase more homes. So, with $300,000, it's a lot of money. I mean, there's certain places, throughout North Carolina where, you could buy probably 2 homes. So out of those 2 homes, if you're collecting $1,500 per home, total mortgage payment is, let's just say $1,800 in total for both properties combined. You're netting, $1,300 a month.
Yeah.
It's, to me, it's a no-brainer. Obviously what's really nice about it too is once you receive that cash, we can refinance as time goes on. And, Angelo would tell you, we've got clients that we refinanced their property, 5-6 times over the last, you have clients that you've refied for the last, 16, 17 years, right, Andrew?
Right.
So it's about what's your goals? What's your plan?
It's all about your goals.
Why are you getting the money? Are you getting the money to just go to Vegas and, put it on black? I'd say, maybe, I said, if you do, maybe I'll join you, but
I would have to,
yeah. But in all seriousness, if, you are looking to refi, in my opinion, it's never a bad time to refi. It's just what your goals are. So, but
right.
you could always, DM, Angelo or I, and we could discuss that further. So.
Yeah, it's that you couldn't have said it better, any better, man. It's all your goals and those numbers. You're looking to purchase other additional properties, then just cash out. Why use yours when we can use the banks? So,
yep.
I hope that answered your question, my man. Thank you for that question. And so we're about at the 15-minute time limit. Looks like we don't want to run over too long here, but. If there's any other questions that anybody else has about the current market, current real estate market in Charlotte. We did a little some numbers last week about prices a year ago versus today, and then days on market and stuff like that. So please shoot us a message, shoot us a DM. We want to be a resource here for you. If you're not looking to buy now or refi now, at some point in time, if you're looking to expand your portfolio, we don't want to be your resource for you. Reach out to Leverage Lending Group, CLTMorgageguy, Carolinas.mortgageguy for all your mortgage needs. And once again, just use this as a resource. I appreciate everyone coming. We're going to be doing this every week.
Every Wednesday.
Ask the Mortgage Guys on IG Live, 12 sharp. So shoot us a comment, shoot us a DM. Appreciate you tuning in, and we will see you next week.
See you next week,
Bye,
guys.
everybody.
Take care.